I think these numbers have been done by looking at accounts one by one, and it's the best estimate we have. And the assumptions we have made with respect to recovery is a little less than 4 times of what we did in the last quarter. So keeping everything in mind, we are hopeful about meeting the target. But in any case, as far as planning is concerned, you assume that things may not work exactly the way you want it to be or you expect it to be, and so we have several lines of defenses kept aside to deal with any extraordinary losses or any other kind of unexpected negative surprises.
Right. So, where would you get your line of defense? And you also mentioned that you do expect your margins, in fact, to trace back to 3%, and you also expect improvement coming in terms of your return ratios. What would be your key focus areas to help you deliver on the line of defense and also in terms of improvement on the overall return ratios as well as the margins?
Okay, for the year 2017, what we have set for ourselves is at least to accomplish what we did in 2015 year. And if you look at it, we had a fair amount of slippages this year, about 24,000 crores, and that have become non-earning. So in theory, if we were to put back the same 24,000 crores on an average basis, we should be back to in terms of an absolute number, to what we were in the prior year. So I think that seems possible. As far as the NIM is concerned, net interest margin is concerned, in the short term, the benefit is coming from the fact that the balance sheet cost, the cost of funds is going down. We have repaid over 30,000 crores of higher cost funding money, and also there is benefit of the reduction in the interest rate in the overall economy. All of that are kind of playing around to happen. So that's really where it is. But coming back to the pricing on the asset side, I think for most part, at least in a substantial way, probably we are underpriced our clients' funding, and we now need to work to making sure those are priced fairly, and therefore I think we should try to reach those margin numbers.
My final question to you. You have undergone balance sheet consolidation. In fact, we're seeing a contraction both on the advances and the deposit book. Where do you see your balance sheet size trending over the next 1 to 2 years? How would your balance sheet structure change both on the deposit side as well as on the lending side?
Sure. So I think we have on the savings account, and we have fair amount of customers. The effort is around to increase the market share of the balances of the customer through a variety of mechanisms, but primarily focused around improving the ease of working, more products, more cross-sell opportunities, etc. We also have a fair amount of opportunity in growing our current account balances because we're absent completely from a lot of areas relating to transaction banking. So we're putting a strong team across over there, so that should also help us to grow our balance sheet. As far as assets is concerned, here is a view we have now. We want to lend to customers with whom we're going to have long-term profitable relationship and a multi-product kind of relationship. There are a lot of assets in our portfolio, in fact, as much as 35,000 crores of syndicated loans, and unless we can convert them into straightforward, warm-nosed relationship, we'll exit out of them. The issue is not balance sheet, the issue is to look at absolute numbers. And if you're going to replace what are non-strategic and non-franchise value lending with more valuable ones, then I think we have done a good job. So that's where it is. I think I wouldn't be too worried if our balance sheet did not grow in absolute terms. We have about 65,000 crores of buyer's credit, which earn us some 40 or 35 basis points. We're currently using them principally because it's a liquidity management tool. Tomorrow, we may not have that. So let's not really worry too much about what is there in the balance sheet. Let's look at the quality of the lending we have and whether we are growing on customer balances which are of more long-term nature.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.